In this chapter, we'll be discussing about rupee depreciation and appreciation. Please note that this is an advanced topic. If you don't feel comfortable in this lecture, you can skip it. It's not that important. It is an advanced topic, but because you hear about these terms a lot in newspapers and they might ask you in interviews, it's better to be prepared. If you find it difficult to follow, you can skip it. So if you read financial newspapers, you see news like rupee loses 27 paise against dollar, or rupee sees biggest loss against US dollar in 2017, or rupee closed at 64.63 dollar, down 0.5% from Monday's close of 64.31. So you see these sort of news. So what does all this mean? So it means that the exchange rate between the US dollar and Indian rupee. Okay, so if the exchange rate is 65, it means to buy one US dollar you need 65 rupees. So say the dollar rupee exchange rate has changed from 64.31 to 64.63. So you might think it is good because normally 64.63 is higher than 64.31. You might think this is good, but in foreign exchange this means rupee has weakened, because earlier we could buy $1 with just 64.31 rupees, but now we have to give 64.63 rupees to get the same $1. So in this example we say that rupee has weakened or rupee has depreciated. If on the other hand exchange rate has changed from 64.31 to 63.97, then we say rupee has strengthened or rupee has appreciated. So the dollar rupee exchange rate is widely tracked by economists because it has huge implications for a country. We import a lot of oil and gold. They account for 35% and 10% of our total trade bill respectively. So if the rupee weakens, we have to pay more for our imports, right? And also other businesses which import goods will be affected. For example, if our company wants to import a machinery from Germany, a weak rupee means we have to spend more rupees to get that machinery imported. Okay, why would rupee weaken? So what are the reasons due to which rupee weakening or dollar strengthening might happen? So there are various reasons. Say for example, just like we have RBI, in US there is something called Fed Reserve. So if Fed Reserve hikes interest rates, then dollar will become stronger. This is because when US interest rate is high, capital outflows will be happening from India to US. Say a lot of foreign investors have invested in India. Now they see US is offering more higher rate of interest. So they'll shift their money from India to US. So this outflow of funds will weaken rupee. Okay, because exchange rate is just based on demand and supply. If demand for rupee is more, it will strengthen. Otherwise, it will weaken. Okay. Another reason for rupee weakening could be poor macroeconomic indicators like high inflation or high current account deficit, high trade deficit. All this will weaken rupee. Global economic slowdown will weaken rupee. Crude oil prices, because US is the single biggest importer of crude oil. Whenever crude prices reduce, US will be saving more dollars to buy it. So as a result, dollar as a currency strengthens, leading to fall of Indian rupee. And also global political risk will be affecting the rupee. So what happens if the rupee is weak? What are the implications? So if rupee is weak, one thing is we discussed earlier, imports will be expensive because we have to pay more. So imports like oil, that will be expensive and will be having a higher trade deficit. But the advantage is exporters will benefit because they will now get more rupees for their sales. So exports will be more competitive, leading to increase in exports, especially IT sector like Infosys, Wipro, TCS. They'll be happy if rupee depreciates because the rupee earnings will be more. Let us then discuss about rupee strengthening. When will rupee strengthen? So good macroeconomic indicators like reasonable inflation, low current account deficit, they will contribute to strong rupee. And favorable political climate or stable government. For example, dollar rupee rate moved from 66.61, 65.8 to a dollar, reacting to huge win of the BJP in UP election. So based on these elections and all, it can strengthen. So a stable government is important for a strong exchange rate. So what are the implications of strong rupee? In this case, imports will benefit because now we have to pay less. And it's also good for corporate India because many companies have foreign debt in foreign currency. So foreign exchange rate means they have to pay less interest. But this is bad news for exporters because now they have to pay more to purchase the same goods. So as you have observed, rupee weakening is good for exporters while it's bad for importers. Strong rupee is good for importers while it's bad for exporters. So both exports and imports are important for a country and need to be balanced. So what RBI does it manages this. For example, if rupee is getting strong, and since strong rupee will hurt our exports, RBI will step in and start buying dollars through public sector banks. Okay, so like that RBI will intervene and try to ensure that the RBI will allow market forces to determine the exchange rate, but it will step in periodically to ensure that it doesn't get out of control. Okay, that's why we say it's a managed float. It's not a strictly, we don't have a pure float system. It's a managed float. So dollar rupee rate all time record low was 68.85. That was reached in August 2013. So for your bank interview, you please update yourself with the prevailing dollar rupee rate. You can just Google it out. Just type rupee dollar rate and you'll be getting the latest exchange rate. And also see how it is moving over the past few months, whether rupee is appreciating or depreciating. So as of October 2017, the dollar exchange rate is around 65. And also in this chart, we are providing the historical movement of dollar rupee rate over the years. Okay, as you can observe, it was around 35, and that was prior to 2008, and currently it's close to 65. There was a point of time where it was even close to 68, as we discussed. That was in August 2013. So in this chapter, the question is to be prepared at: what does it mean when we say that the exchange rate of US dollar is 65 rupees? It means that to buy $1, we have to shell out 65 rupees. What is meant by weakening of rupee versus dollar? What is meant by strengthening? We discuss this. Why is dollar rupee exchange rate widely tracked by economists? What are some reasons due to which rupee weakening may happen? What are some implications of weak rupee? What are merits and demerits of rupee depreciation? Is strong rupee good for Indian exporters or importers? Is weak rupee good for Indian exporters or importers? All this we discussed. What is the prevailing dollar rupee rate? Please update with the latest figure. And how is dollar rupee rate moving over the past few months? Whether rupee is appreciating or depreciating. This you have to see at the time of interview what's happening for the past 3 to 4 months. Whether rupee is appreciating or depreciation. This you can find just if you read the financial newspapers, they'll be giving the trend. There'll be a section on exchange rate movements, and there'll be, if you just read that article, there'll be sufficient. They'll be discussing whether the rupee has been depreciating or appreciating over the past few months.